So portfolio management is a really important part of investing. So today I'm going to show you my three portfolios, US, UK and Asia Pacific. So stay tuned to find out which five positions I've got that are over 100% return, including one that's getting towards 1,000. And also if you're interested in Boohoo, you can find out how much I've been smashed on Boohoo. So stay tuned to find all of this out and you'll also see progress towards my medium term goal. And I've got a couple of little bits of interesting information for you. So stick with me and hope you get some good value out of this video. So first portfolio is the US portfolio. I've got Bank OZK kicking us off as the largest US position. I love this company. It's a long-term hold. Nice dividend clicks in, and it's actually one of two that's on 96%, so just pushing that 100. Delighted with the performance there. And Unum Group is the second biggest US position. And for me, it's not a very exciting company, which actually sometimes is the best type. And for them, it's very much sort of an undervalued, high dividend stock with room to grow that dividend over time. First red is Corsair Gaming. Now, I like Corsair. I use the product down about a third. If it did drop a little bit more, maybe towards that sort of $15, $16 mark, I would average in a bit. But I think averaging when it's only a third down won't make much difference to my overall average unless I put a lot of cash in, which I'm not willing to do at this point. It's quite a big position already. So just playing the long game on that one. I think 3 or 4 years' time, this will be absolutely flying. Now, Micron has had a bit of a wave recently. It was down in the mid-70s, but that's for $100 a share, and it's dropped back down again. So it's been quite volatile. Again, I see this as a good long-term hold. It does chip in a dividend as well. Walgreens pretty much back to level. Great management team here. Again, a very nice dividend. And I think they are doing some really good things here. So I think this one's really going to be a good positive performer. And on the flip side of things, we've got Tenant FinTech Group, which was known as Peak. This is almost down 50%. I've got my average down into the low $7 per share range, and the stock's traded anywhere from, I think, about 11 to 3 in the last kind of 3 or 4 months. So it's a very, very volatile position. Going to get uplisted, I think, to the NASDAQ again, hopefully at some point, and that should then push it on a bit more. Now, this is the bad boy here. So AMR, Alpha Metallurgical Resources, we're at 841% return, and this is a metallurgical coal miner. I'd be very surprised if this doesn't hit 1,000% based on the current sort of pricing in the market and the way that they've been performing. So I'm very excited to hold this probably for another 3 to 9 months because there's likely to be a monster dividend later in the year. Ramaco Resources is the same sort of scenario in that they're in that coal mining section, and I think this one could probably get to at least $20 a share. So Dropbox is next. That's had a bit of a ride. It's only up 3% now, and I did add to that position a couple of months ago, and I think this one is definitely undervalued with a good management team and very steady, nice long-term prospects. Followed by 2 US index holdings, that's dropped back a bit based on what's happened in the market recently, but that's just a long-term hold. And Anthem, as before, nice long-term compound that pays out dividends, so again, that's a long-term hold. US Bank Corp's up 33%. I'm going to expect that to push on a bit, particularly as the US interest rates start moving up. And then Cumulus Media, I think I was up 50% at one point on that one. It's dropped back down to 4. This is a bit of a turnaround place. It might take a while for its turnaround to be recognised, but when it is, it will absolutely pop. Now, TTCF's down 40%, which is 18 points lower than it was on my last update just at the start of the year. Now, I think my question here is on the management team. Are they good enough to deliver against the sales contracts that they've signed? Because lots of people can sell, but actually it's the buy side and the operations side that fulfill that. And can they actually do that, or are they just good salespeople? Products seem to be good. Sales seem to be good. They enter lots of stores. Are they actually going to deliver? I'm not sure, but that's just what I think. Let me know what you think. Do drop in the comments below your opinions on TTCF. And the second 96% one is American Express. Really like the company. Been a long-term customer of theirs. And actually, I've got a £20 referral link as well. So if you want to join up and become a card member, I'll drop that in the description below. Take a look if that's of interest. But that's going to hit 100%. I think it's a long-term compound in this one. It's a really good company. And there's no reason for me to sell at the moment. So Yan is probably one of the worst performers in terms of change in the last sort of 5 weeks. They're down 29 points since last time, so that's 50% overall. I think this is underappreciated by the market as the sort of gambling side online in the US takes off and becomes more widespread, is more legalized. This should improve significantly, and the profitability toward the back end of this year, I think, is going to start clicking in as well. So I think most of us know Berkshire Hathaway, Warren Buffett's company, that just continues to plod on, and that's now 59% in about a year and 2/3. Long-term hold that one for sure. When we start getting into these smaller positions, this portfolio now, so 20% on the other index. Intel's down 21%, a little bit disappointing with its price performance. The results recently suggested that earnings going forward might be impaired slightly due to their capital investments. Long term, open up additional earnings, but they do still make a lot of cash at good margins. So again, if that starts looking at sort of minus 40%, I wouldn't mind building out that position. Total reach is about level, but disappointing performance recently in terms of at least the market price. All of that buyout still on the table when they were talking about being bought out at $35 a share because they're around about 20 now. So kind of take that at the moment. And in mode up 45%, was up 200% about a few months ago. So that's had a really sharp drop, and it is just starting to push back up. Great company, growing really well. They keep beating expectations, and they are also big in terms of their margin. So again, if this drops any further, I'll keep chipping into this position, kind of looking around about that $40 a share or less. That feels like a good position to build out. Very strong company, and it's far too small as a position in terms of this portfolio, considering the strength of the company. Heritage Growth Properties has been doing the opposite, growing. It's down 39%, but again, this is a long-term asset play, so it's just going to be held. And then the smallest positions then, Sturm and Co. is about level. Voyager, which is tied to crypto, is down 29, but that's volatile. Whatever the Bitcoin price is doing, it sort of tracks that, but they're growing really well, and they're a very highly rated platform. And then Altisource, a bit of a cyclical play, just down 12. There we go, that's the US side, and we're going to move straight into the UK side for those who are interested in that. So I've been absolutely getting totally hammered on Boohoo, and I've been dropping my average really nicely. And on a cost basis, it's now 10% of my portfolio, but it's down 48%. So you can imagine if you double the size of that slice, if it was level, that's how big it would be. So it'd be pretty significant. So I think I'm topped out on that one at the moment. Yeah, very reluctant to add more unless something extreme happens, because it's a big portion. If I'm wrong or something unexpected happens, then I would make sure I don't lose too much portfolio, because in terms of risk management, if you lose 10% or 15, 20% of your portfolio, so that starts getting big, it gets harder to claw that back, because you've got to make the money back on your other investments on top of what you've already needed to make. So FTSE 100 just plods along, 30% up in total. Quite a lot of green coming up here, which is good. So Aviva's getting towards 50% and a very nice dividend on cost as well. This is a long-term hold for me, very supportive of Aviva. A couple of mutual funds next, which have done really well, so up 150% and then 100% on these two. In fact, the 150% job was almost touching 200% a few months ago, so that's pulled back quite dramatically. Which 250 is 39%, so a slight pullback there, but that's still doing okay. And K3 Capital Group, which is one of my sort of small caps that's growing nicely and actually pays a dividend as well, which is quite rare, up 61%. They've been flatlining recently in terms of market price, so a period of consolidation. I think our Shell's been recovering nicely in the last few months. Go back perhaps 3 or 4 months, I think my position overall was at 0% return, and we're now up to 32. So that has moved on nicely. We're looking at about £20 per share. So I'm going to roll that and forward a bit more, but this is something I'm probably looking to sell this year when that commodity bubble starts flattening out. We've got massive high coal prices and oil prices at the moment. As that starts kind of to flatten out, then I might then get rid of Shell. Overall, there's probably 5 or 6 too many holdings across the portfolio, so just want to make it slightly easier to manage whilst keeping a decent amount of diversification for the purposes of risk management. So Unilever, a bit of a steady eddy, you might call them. Dividend yield on cost is about 5%. Again, it's just a long-term compounder to hold. So any kind of share price movement on top of that 5% dividend, then it starts becoming quite a nice return. The best UK performer is Investec, and that's pushing on 200%. And again, a nice dividend on top of that as well. As well as Investec, BT's moved on about 20 odd percentage points in the last month, and they're back up to 67%. Legal & General, another good dividend insurance company, much like Aviva. American Tobacco, again, a lovely dividend company, and same for Direct Line. It's a bit of a theme here in the UK portfolio. And again, City London Investment Group, a very nice dividend payer as well, as give me some capital return there. Duke Royalty, a small cap alternative lender, that's probably the best way to describe them, up 75 points, pretty steady since last time. The smallest positions, you've got plus 500 level, but they pay out a nice dividend. And they're doing a lot of share buybacks, so I'm expecting that to start pushing on, particularly as their results were better last time. Got fund here up 37%, and then Argo Blockchain, a bit of a crypto play, but speculative is down a few points there. So very, very green on the UK portfolio, so pleased with that. So Boohoo's making a massive difference to the overall performance of this pie, but the rest of it's looking good. And a lot of these are quite good holds, a lot of dividend payers. So that's kind of where I see my UK portfolio at the moment. No plans to add anything particular. I mean, there's things I'm looking at like S4 Capital. That did drop into the £4 range. If it had gone down to actually £4, I probably would have added that one. It kind of went to like 450 for one day and then it went back up. So I'm just watching that closely. Going back to the Alcon portfolio, I'm just looking at overstock at the moment as well. Finally, back to UK, a Ferrexpo, which is idle miner, but they're in Ukraine, so you can see what's going on there. The price absolutely tanked. So potentially, that pun wasn't actually intended, but potentially there could be some value there. Obviously, if certain things happen, it's going to go down even further. If certain things don't happen, it will start to recover. Just trying to work out what the right timing is there. I'm getting towards the end now, so Asia Pacific portfolio, much smaller and much newer portfolio, and Alibaba's the biggest. No surprises there. It's pretty much level. The last update, 9% down 5 weeks ago. Index is about level there. Pacific is in Japan. Kelly Partnership Group Australia's done nicely. That's up 56 percentage points now, and that dividend as well as a small cap growth company. But again, quite rare. As on paper, it looks dramatically undervalued, but it's certainly not in favour at the moment. But let's hope the Warren Buffett saying of, I think it became Benjamin Graham of the market's a voting machine in the short run, but a weighing machine in the long run. Hopefully, it becomes a weighing machine for who you're in due course. When I've made something back on that one, I probably will be looking to exit that position. Australia index 17%. And Baidu, that's one I'll close out where I can just make it roughly back to level. It's too small to have any impacts. There's no point in holding it. I'm just going to take you on a quick journey here to ShareSite, and that's where all this information comes from. Really good tool to actually help you manage your portfolio, particularly if you're across different platforms. I have quite a long history of different transactions. So I've got American Express here, which is my 96% return. The actual compound annual growth rate in this one, I've had it, is 44%. And my FTSE 100, which I guess is sort of the benchmark for UK, in that time, with the same investment amount, periods it's out. Though by the end of this year, I'm going at 10% a year. I need to be at £38,536 for the portfolio. Bear in mind, we were ahead of the rate last year. The number now is just shy of 40, so 39,781. Now that's down 1,500 since the last update, right at the start of the year. That's not actually too bad considering the amount of volatility and the way growth stocks have been having in the market. It's actually not as bad as I was expecting, particularly look at what's happened to Boohoo and Talent FinTech and Corsair, for example. 1500, obviously that's not great, but month to month variations happen. Very calm about it. I'm not panicking to sell. So I'm ahead of the target for the end of the year. And actually the forecast, if you add in 11 more months of money going in, £300 a month, which is my earlier challenge, it's another 3,300 to go in. And if you add dividends in as well that are likely to be received, you're probably looking at around about 43,500 to 44,000 then. And if everything else stays the same, which would be well clear of the sort of stretch run rate target. Let's see what happens. A lot can change between now and then. So 2 more things to finish off with. The actual value then, this is how it's split between the different portfolios. So US is still the biggest, 44%, and then UK is 38%. So that's 5/6 of the money between those two. Asia Pacific, you can see there's just over £5,000. And then cash has gone up by a few £100s because I have sold BP Midstream Partners since the last full update. That's the only change in terms of positions that I hold. So that's the split. And then what I've tried to do is, I had this £1 million challenge, which I'm still doing a long time ago, but it kind of, you guys can't relate to that. And if you're watching, you can't really relate to that because it's so long term and such a big number, it feels so abstract. So I've tried to break it down for myself and presentation to you in terms of actually the medium term goal I've got is, if you extrapolate the run rate, is £100,000 in 2029. That's what I need to get to. I'm on track for my really long term goal, which, say £1 million. That's so crazy for only putting £300 a month in. There's no point in even looking at that every month. It's pointless because it's not going to change month to month. Probably look at that every 6 to 12 months to see how that's going. Focus now then, medium term goal, something that we can look at, relate to a little bit more, see how the performance is going. 100,000 by 2029, that's with a 10% return and £300 a month minimum going in. Boohoo's got smashed, so it's down 50%. Click at the card on screen now, and you'll be able to see my deep analysis of their recent results and why I think I'm actually going to bounce back, and I'm not worried at all.